Let's go.
Welcome, everyone, to Zephyr's Adjusted for Risk podcast from the shores of Lake Tahoe. This is Ryan Nauman. I'm the market strategist here at Zephyr. I'm really excited for today's episode as we're going to be diving into the evolving relationship between financial advisors and technology. As we know, client expectations are constantly shifting and regulatory requirements continue to expand. Technology has become not really just a convenience, but a necessity for modern financial advisors. Well, I have on an industry expert who is a wealth of knowledge and going to share some very interesting insights regarding the intersection of wealth management and technology innovation. But first, this episode is sponsored by the award-winning Zephyr, which helps investment professionals make more informed investment decisions. All right, enough from me. Let's go ahead and get started and bring on the star of the show. I'd like to give a very warm welcome to Michael Rose. Michael is the Director of Wealth Management at Cerulli Associates. Michael, thank you so much for coming on the show. It's an honor to have you on. I'm really excited about this conversation. Can you just please tell us a little bit more about yourself and Cerulli Associates?
Yeah, sure. And thanks for having me, Ryan. It's a pleasure to be here. So Cerulli Associates is a market research and consulting firm. We specialize exclusively in the asset and wealth management industries. And we've been in business for over 30 years. We're privately owned. And our primary business is to provide competitive market intelligence and research to wealth management firms, asset managers, technology vendors, et cetera.
Fantastic. Michael, you did a webinar, webcast about a month ago, maybe 2 months ago. Time is flying, like we talked about, regarding the state of your wealth management technology 2025 report. Fantastic. After that, it was an honor to start talking with you, have you on the podcast. So I love that webinar, and that's what we're going to talk about today is, that state of Cerulli's state of wealth management technology in 2025 report. And within it, an increasing number of investors expect their financial advisors to offer financial planning services. That's a change. When I started in this industry, aging myself here, Michael, 20 years ago, it was more brokers, few people did financial planning, not a lot. But now it's evolving where you kind of have to offer financial planning. Are financial advisors addressing the demand and offering holistic financial plans, you think?
I think so, and I'm in a similar boat as you, Ryan. I started in the wealth management business about 15 years ago, so a little bit behind you, but have certainly seen an evolution in the range of services that advisors are offering to their clients. Our data. So as part of our research, we run a lot of surveys. So we run over 50 surveys every year. And one of those surveys that we've been running for a very long time is our survey of financial advisors. And in that survey, we identify exactly the services that advisors are offering their clients, and we've seen how that has shifted over time.
Yeah.
Big picture, that we've seen a huge transformation, right? And most advisors are adopting wealth management services as an offering to their clients. So I'd say about 90% of advisors deliver some type of financial planning service, but there's a lot of nuance and differentiation in terms of the range of services that are being offered, the sophistication of those services. And there are a lot of factors that influence that, right? So we see that advisor practices that are oriented more towards high net worth investors deliver and offer a wider range of planning services because their clients have generally more complex financial circumstances. But certainly, we've seen a pretty marked shift in, advisors adopting and going beyond beyond investment management to incorporate, a whole range of financial planning services.
hmm So I completely hear you. I feel like, more people I talk to, it's all about financial planning, holistic financial planning. But what if financial advisor, they say, you know what, we're not offering holistic financial planning right now. What do you think is holding them back? Is it just they don't want that, long process of fact finding and stuff like that? And it's a process. Or is there something else that maybe is why they're not offering it?
Yeah, there's a few reasons. So we actually that's one of the questions we ask in our financial advisor survey. And there are a number of challenges associated with kind of investor demand and in how they're receiving planning services and how advisors deliver those services. But a couple of the challenges we hear from advisor include really limited time and resources. That's the number one
Okay.
challenge for advisors trying to deliver financial planning. The second most frequently identified factor is that the financial planning process is actually too tedious or time consuming for clients, right?
Oh,
So
right. Okay.
there's there are challenges on both sides of that equation. Um, I was just having lunch with an advisor about an hour ago talking about kind of the importance of inertia and as a former advisor myself, I can tell you how many clients I used to have to stay on top of to, hey, get your estate plan done, get your estate plan done, right? And
Yeah.
they just don't pull the trigger because they have other things that are priorities for them. And so, that certainly is a challenge, just getting the clients invested in spending the time and effort necessary to go through that planning process because it can be very time consuming, very complex, and very intimidating for
Yeah.
clients. On the flip side, for advisors, one of the things that we've seen is, you know, if you look at asset managers, what we've seen is asset manager fees kind of coming down, right, and under fee pressure. Our data shows that advisor fees have actually stayed relatively buoyant over
Okay.
time. But what has happened is advisors need to provide more services for that same fee. And what that's creating is margin compression for
Hmm.
those advisor practices. And they're having to do more and provide more services for that same fee. And that means advisors are increasingly pressed for time. And that, it makes sense that that is a major challenge for advisors today.
Yeah, that's fantastic, Michael, because, going back to 20 years ago, financial advisors, they could offer 1.5, 2% on investment management, right? They can't do that. They'll get laughed out of the room now if they do that now. So margin compression, and then I guess that's an obvious segue to technology, right? Because you've talked about time constraints, resources, and if you're not getting paid what you used to in terms of investment management and margins have come down, you're going to have to make efficient processes. So let's focus, more on the investment management side. That's where Zephyr sits of the advisory practice. Do you feel advisors are overall satisfied with investment management technology, or is there a gap there?
I'd say overall, if you look across the entire tech stack of a financial advisor practice, which incorporates a lot of different technologies, right?
Yeah.
Investment management technologies, operations technologies, financial planning technologies. Overall, we see generally higher rates of satisfaction with the technologies associated directly with managing investment portfolios. Um, and I think what we see is those are really pretty mature technologies, right?
Yeah.
And they're pretty core to advisor practices. Um, and so I think that's an interesting takeaway is that, those technologies I think are pretty robust for the most part.
Mhm.
I think where we're expecting to see continued innovation and improvements is really in terms of, what we're going to see with AI over the next 3 to 5 years. So, one of the challenges that we see in terms of technology adoption among advisors is the time to learn how to use the tools, lack of integrations, and that applies across the entire stack of technology a practice utilizes. And I think there's opportunities for AI to make that a lot easier, right? So, use an AI agent to, you know, to pull up on your screen, hey, what's the return of the S&P 500 over the last 10 years? right? And just be able to interface and interact with that technology without having to learn, some of the complexities associated with that tool. I think that's going to be a real game changer for adoption in productivity.
That's a great point. And you talk about integration, and very important. And, you know, with AI, like you said, I never really thought of this. Instead of going to all these different applications, you type into Chat GPT and there it is, right? Instead of having opening up a application. Very good point there. Is there one segment of the stay with the investment management technology that where maybe advisor satisfaction is highest? Are technology providers, is there one piece that they're doing a really good job with?
Yeah, so if we look across the tech stack for on the investment side, we're really looking at things like portfolio accounting, performance reporting, trading and rebalancing, proposal generation, investment research. We see the highest rates of satisfaction with portfolio accounting software.
Okay.
Again, that's a pretty mature tool. It's a tool that is very hard to migrate away from, right? Because of all the historical
Yep.
client data. Um, you know, we see advisors really making that change if they have to, if they need to migrate to a platform that has more robust multi-custodial capabilities, or some other, in, newly important function and capability for the practice. But overall, we see the highest rates with accounting and reporting.
Interesting. So you take a step back here. You mentioned about the robustness of a tech stack. You know, for a wealth management practice, CRM, trading, rebalancing, you name it. You know, does that pose issues, or is there something that advisors are really demanding within their tech stack that, you know, maybe the vendors aren't really fulfilling right now, a gap? Because, like you said, and you mentioned integration, is there something more there that advisors aren't happy about?
Yeah, integration is the number one kind of pain point for advisors when we ask them about kind of the challenges and frustrations that they have with their technology. And we've really seen, particularly in the independent space, we've seen a significant growth in kind of the capabilities of those turnkey platforms and advisors increasingly, preferring a turnkey solution over, over kind of that maybe the best point solution that doesn't integrate with the rest of their technology stack. And I think a lot of that has to do with just, as we talked about, the need to drive advisor productivity and efficiency. One other point, we survey advisors across all channels, from the
Mhm.
wirehouse channel all the way down to, the fully independent RIAs and everything in between. And so, the challenges that advisors identify with their technology stack, changes significantly depending on where they are, right? But another very common, point of frustration for advisors is compliance restrictions that firms place on technology, that really limit, some of the key things that they may want to do. Um, and the compliance is a real challenge, and it's, we're already seeing it become a real challenge with AI adoption, right? For good reason, very good
Yeah.
reason. Um, but that's another real kind of point of frustration, probably unsurprisingly, that we see from advisors.
Yeah.
Um, and it's just
Interesting. With
insufficient time to just
oh,
not enough time to learn and implement. So that's where I think, AI chatbots and other things that can be deployed in technologies that our advisors are engaging with to make it easier and quicker for them to get support. How do I do XYZ? We're already seeing significant improvements in that regard. But it's just continuing to evolve so quickly, and the capabilities of those AI agents is rapidly evolving. And I think that's going to be a big win for advisors over the next few years.
yeah, you're exactly correct. And do you think you brought up independence and they're focusing more on those turnkey asset management applications? Not surprising. Do you think they're in a better situation, independence, to find, you know, to move, be agile, find a well tech stack that has integration versus maybe a captive advisor at a broker dealer?
In terms of like do advisors see that as an advantage of the
Yeah, are
independent
they,
space?
is it easier for them to adapt these new technologies where they're more agile, a one um sign-on application that's fully integrated versus, we're seeing it all over the place that very rarely do we see an independent advisor go to a broker dealer, right?
Yeah.
It's always moving independent. Is that
Yeah.
one of the reasons why is just technology? They have more offerings to make their practice easier and more efficient?
Yeah, it's a good question. And I think if you look at that trend towards independence, primarily hybrid REA and independent REA, our data clearly demonstrates that those have been the fastest growing channels by far over the last decade.
Hmm.
It is easy to lose, despite that growth rate, which is, important. It is easy to lose sight of the fact that the four wirehouse firms control more client assets, investable assets, than the 16,000 REAs combined. So this is definitely still an industry that is oriented towards your traditional captive broker-dealer space. But the hybrid REA and independent REA spaces in particular have been the fastest growing for a long time. And there's a few reasons for that, Ryan. Um, it really boils down to kind of control and autonomy
Okay.
over how advisors run their practice, the types of services that they offer to their clients, the ability to not have to deal with bureaucratic regulatory compliance department that's not going to allow them to send a LinkedIn post or do a webinar or something. So the bureaucracy is a point of frustration for captive advisors. Um, the other top driving factor is economics, right? So the higher potential payout. Now, we've done a lot of research around what that net payout looks like because a 90% or 100% payout on your business sounds great until you have to account for all the various expenses that your prior broker dealer was providing for you. So, the numbers vary significantly depending on the size of the practice.
Hmm.
Um, but to answer your question as it relates to technology, I think the other important factor that's enabling the growth of the REA space is the maturation of the REA space. So when I started as an advisor 15 years ago, I started in the independent REA space, and from a technology standpoint, it was the Wild West, honestly. There,
Yeah.
there weren't a lot of robust tools. The integrations were very limited.
Yep.
Um, and that has completely transformed. There's been so much investment in this space from technology vendors offering solutions, and there's been a real growth of those turnkey all-in-one platforms. So for those advisors that in that independent RA space and hybrid RA space, well, those advisors have full autonomy over what their tech stack looks like. And
Yeah.
so if they prefer the integrations of an all-in-one solution, they can do that. If they'd rather look for best of breed and deal with some of the limitations from an integration standpoint, they can do that too. So they have full control. I would say the one thing that we're studying right now that's really important as it relates to the REA space is as that space has matured, the technology has matured, but we're starting to see the rise of the REA, the continued rise of the REA consolidator.
Yeah.
And so, you know, 5 years ago, if you broke away from a large broker dealer and became an RIA, you were generally setting up your own practice or maybe tucking into another smaller practice.
Yep.
But now with the rise of the aggregator, um, you have the option to join a firm that's of significant scale, 5 billion plus, um, that has pretty robust technology. Um, in some cases they have actual CTOs and CIOs and,
Yeah.
and developers that are building custom integration. So the REA space is rapidly maturing and evolving as a result, and the technology environment has really changed.
Yeah. I'm glad you brought that up about how it just, I talk about this all the time, at Zephyr, 20 years ago, we're aging ourselves a lot here, Michael. 20 years ago, I worked with a advisory practice that were advisors of plan sponsors. We use Zephyr. We use Zephyr Style Advisor. That's where I got a custom to Zephyr. But at the time, for investment analytics, it was really either Zephyr or Morningstar for the
Yeah.
most part, right? And
Yep.
um, at the time, we won a lot of business because of Zephyr and the graphics. But now, like, I mean, 20 years ago wasn't that, I don't like think was that long ago, but now the space has just evolved and there's so many different players, whether it's niche players or just the TAMPs, right? Turnkey asset management platforms. It's completely evolved over the 20 years, like you said, and now it's providing more opportunities for those independent RIAs to go out on their own.
Yeah, I mean, it's good at the end of the day. I think it's good for the advisors. I think it's good for the end investors. It's good for advisors to have more choice, right? To operate in the affiliation structure that best aligns with how they want to serve their clients.
Yeah, exactly. And at Zephyr, we were at investment analytics primarily. Now we're really evolved to, like you've said, you've got to be able to kind of have that one point solution. Now it's a wealth management platform, we like to say, that involves a lot more features than just, analyzing a mutual fund. So we're evolving. Now we've got proposal generation and, investment policy statement generation. That leads me to the next question. Based on your report, is there a reason, is there a piece of this puzzle that advisor satisfaction is the lowest?
Yeah, so it's actually a good segue. So investment policy statement and proposal generation tools within the investment management related tech stack has the lowest rate of satisfaction among advisors. Um, I think there are a number of reasons for that. I think advisors really want proposal generation tools that enable them to articulate a compelling and a differentiated value proposition to their clients and
Okay.
can align that value proposition with that client's unique needs. Um, and there are a growing number of tools available for advisors to kind of take that proposal generation, IPS development kind of to the next level and really use it as an effective sales and marketing tool. But to my earlier comment, I think one of the challenges in that space is compliance restrictions, right? Um, so I think there's opportunity for continued innovation in that space. Um, but we really need to see the broker dealers and the compliance departments across the industry kind of embrace that and be able to structure those proposals in a way that aligns with their risk management
Mhm.
process.
Mhm. Yeah, and just it's a key piece there. And so do you just think along with the compliance issue, the providers of proposal generation technologies, they just aren't quite there yet in showing the value. So financial advisor just isn't there yet. The technology's not there yet in terms of here's a value I can bring to my clients. Is that kind of the gap?
I think there are a number of solutions in the proposal generation space that I find to be pretty compelling.
Mhm.
Um, and so I think there are tools available, particularly in the RAA space. I think that is less so the case in the traditional captive BD
Okay.
environment. And that I think is what's driving, because again, we're looking at advisors overall collectively across all of those channels in terms of what their satisfaction rates are. Um, and I think, the other factor, even in the independent REA space, is a lot of these tools are relatively new, right?
Yeah.
And one thing we have learned for certain is most advisor practice, again, we've talked about it ad nauseum. They're so busy trying to keep the lights on and serve their clients. They're not proactively, researching what the latest and greatest technology tools are. Again, they in the REA space, they have a huge technology stack that they have to manage. There's
Yeah.
a huge number of tools that they have to utilize. And, a lot of them just don't have the capacity to be proactive and make sure they're abreast of all the latest innovations in the technology space. And so, we've seen a lot of evolution in the proposal generation tools over the last few years. And I think advisors are maybe just a little slow to catch up with it, but they're going to get there for sure.
Yeah. Interesting. And the space you mentioned is evolving and growing quicker than ever. So, a financial advisor, like you said, to stay on top of it with all, and AI is making it, whether it's like automated note taking and client communication, which is really like, how do you stay on top of it when you're trying to stay on top of just their investments, what's going on in the world and all that stuff? I maybe that's why I got out of the investment manage or the financial advisory space, and sitting on this side.
Yeah, I mean, I
But
think that's one of the reasons we're seeing the growth of those. There are a lot of reasons we're seeing the growth of consolidation, but
oh yeah,
yeah, just the complexity of managing all the aspects of the business. If you are a small RIA practice, it's getting increasingly difficult. And RIA firms that give you some level of autonomy more than you could get elsewhere, but give you kind of a robust suite of tools. They're doing all the back end technology integrations, and they're responsible for figuring out what the latest and greatest is. That's a real advantage for a lot of advisors that really just want to focus on working with their clients and not dealing with the operational side of the business. It's another reason we see advisors attracted to the IBD space as well.
okay,
Um, so
interesting. Is there a gap? You talk to a lot of financial advisors. You also talk to a lot of technology vendors. Is there a gap between what advisors are demanding and the offerings from technology advisors? Is there something where maybe technology vendors aren't, keeping up with advisor demands?
yeah, I'd say again the number one kind of shortcoming I think is integrations.
Okay.
So many of the advisor conversations we have when we talk about their tech stack and what their where their perceived gap is, it's the fact that they have to open the CRM, plug in client information, then they have to go into their financial planning software, plug that in. It's just a real pain point for advisors, and it really limits their productivity. um,
Okay.
so I think the more the more firms are willing to play nicely in the sandbox with other firms across the ecosystem, I think that benefits everybody collectively, the advisors and the vendors.
One point that we always come across is we talk about integration all the time, but what, and this might be a silly question, but what is integration? Is it like me just pressing a button and here I'm sending data to another application, or is it integration where the feel and likeness of the two applications are the same, so you don't really see a gap between them? Like, are they demanding like full integration, or where you can sync the data between the applications?
Yeah, it's actually a really good question. So there is certainly, like, from a user experience standpoint, um, a kind of a uniform look and feel of a technology when you move across portfolio reporting to trading and rebalancing, and doing that all within one pane of glass is definitely a huge advantage. But I think much more importantly is the ability to just seamlessly have data shared. So, for example, um, if I am pulling up my financial planning software on Wednesday morning, is that automatically being populated with the latest portfolio account values? Is it pulling in um, through integrations held away account asset values? Um, that it's really as simple as that. Where a lot of data has to be entered multiple times. If I'm creating a account application for a client to do a Roth conversion, or what have you, you
Mm.
know, is the form being pre-populated? It's really just basic things like that, where I think there's still a long way to go in terms of creating a seamless integrated experience across the tech stack.
Yeah, and that makes sense. It's just so nice just to have that data moving behind the scenes, and you just, like you said, you open it up and it's there, boom, done.
It just works. Yeah.
Yeah, it just works. Yes. Lastly, you talked about AI, so I think I know where you might go with this, but what does the future look like for wealth management technology, integration, AI. Um, what's it look like? Get your crystal ball out, Michael.
Yeah, I think the most disruptive um, trend as it relates to technology is going to be AI, right? It's what everybody is talking about. Um, I've been a attendee of the T3 conference,
Yeah,
Technology Tools for Today, which is a wonderful conference. They've been running it for a number of years. I've been there for a number of years, and it's just amazing to see the number of sessions oriented towards AI just increase year over year to the point that I think it had to have been at least half. I don't have a
wow.
scientific approach to that, but gut check is probably half, if not more, the
Yeah,
sessions were AI oriented. Now, a lot of that, there's a big question about how you actually define AI. And I think a lot of the AI-like functionality is really just kind of sophisticated algorithms that are
hmm,
leveraging the data that advisors have entered more efficiently. Um, that could be leveraging data in the CRM to identify,
okay.
what an advisor should be doing in their client meeting, whether, they need to review beneficiaries in an account, how recently their estate plan has been reviewed, et cetera, et cetera. I consider that more just core algorithms.
Yeah,
Um, in terms of AI and language models, I think it's going to be a long road for us to kind of get to full deployment. Again, compliance
yeah,
is definitely going to be a barrier to adoption there, but we're already starting to see advisors deploy AI in some forms.
yeah,
You mentioned AI note takers. That has really grown drastically in adoption. And it's, from the conversations we've had with advisors, it's really been a game changer in terms of productivity.
yeah,
um, AI chat agents built within technology tools to help support advisors using the technology. But a lot of the functions that are performed in wealth management are kind of very rules based, right? Um, and as long as you have the collective set of data needed to make a decision based on a particular rule and parameter, that could probably be automated.
yeah,
And so we're seeing firms really invest in automation and in AI. I think one of the things that's going to be most impactful over the next few years is the AI application within financial planning software to really
mhm,
do some of the tools can do this now to a limited extent, but really kind of automating the planning opportunity identification, um, automating the income tax
mhm.
planning
Okay.
opportunities, right? I mean, that's all just client fact pattern
Yeah,
and understanding what the tax rules are, or understanding just basic core financial planning principles. Um, and I think the focus there is going to be helping advisors to be faster and better at
yeah,
delivering financial planning, which is really what they need given the challenges that we've talked about they're facing in their practice. So, we think over the next few years, it's still very early days. It's the bottom of the first inning.
yeah.
But we think over the next few years, we're going to see more adoption of kind of a broader array of AI tools across the tech stack.
Yeah, Michael, fantastic. And I think that's a great way of, recapping this conversation. We started about financial planning, the issues with it because it takes so much time. AI makes, will make things more efficient, hopefully. Thank you so much for coming on the show. It's really an honor, really fun conversation, very insightful. Thank you. Where can our audience get more information about Cerulli?
Yeah, well, thanks for having me, Ryan. It's been a real pleasure. Enjoy the conversation. A lot of the folks that are listening to this podcast, they probably work for firms that are clients of Cerulli.
Yeah.
If you're interested to see if you have access to our research, you can email our team, info@cerulli.com. We're a pretty small boutique shop here, so we will get back to any emails.
Yeah.
Um, but we work with the most asset managers in the space and wealth management firms, technology vendors. So if your firm subscribes, we can help you get access to that research. Just reach out to us.
Fantastic, Michael. I'm a huge fan of Cerulli. I love your research, love the content, some great insight there that maybe you just kind of think outside the box makes you think a little bit deeper into whatever sub, whether it's technology or managed accounts. You guys do great stuff. I love the research. Thank you, everyone, for listening to this episode of Zephyr's Adjusted for Risk podcast. You can watch all of our other episodes on the Zephyr YouTube channel and Spotify. Please be sure to like and subscribe those channels and follow us on LinkedIn. Thank you very much and have a great rest of your week.